Hi, my name is Shane Williams. I'm President and CEO of West Red Lake Gold Mines, and we're in the process of putting the Madsen mine back into production and recently put it back into production, actually.
You have announced that. Congratulations, Shane. Look, I just wanted to kind of ask a few questions, if you don't mind, about that decision. What are the kind of specific sort of technical KPIs from the bulk sample program that allowed you to secure the board approval for the restart?
Yeah, it kind of goes back, as you've been following and your viewers have been following, back 18 months ago, we actually took the project over. We set ourselves a number of targets that we wanted to achieve, kind of with the board aligned on what we wanted to achieve. Some of that was around, capital that we needed to spend, drilling that we needed to do, underground development that we wanted to get, some capital we wanted to put in place. And so 18 months ago, I laid that out for the board and for what I would want. These are some of the things that I would want to see before I'm ready to go to the board and say that. And the bulk sample was a key part of that. And really that confirms that the resource and the work we've done is falling into place as expected. We took our drilling, our modeling, we actually mined in areas where we said we got exactly what we said we would do. And so that was the final tick that we were able to go to the board with all the work we've done. Not just this was kind of the culmination of 18 months of work, really.
Right, but what about things like the technical things like the kind of grade reconciliation or mill recovery or dilution control, things like that?
Yeah. We got all those criteria. The mill was never the issue, as you know, on this project. The mill operated. We got 94% recovery. No problem, as planned, as expected. We got the grade that we planned as per the model. The model changes, as you know. The model will go up and down depending on areas, depending on grade. So the areas we picked, we have a model, a resource model that says 10 grams, let's just say, or 5 grams. And so when we mine that, we reconcile that back to the model. We get the actuals. We look at the dilution and some of that. There were some of the issues we've had, dilution in the grades and the mining. We put all that together and we go, yep, we got 5. We were in 96% of that across 3 different areas. So very, very closely reconciled to what was expected.
Right, so a huge degree of confidence in terms of the models used in the PFS and mine plan.
Yeah, and just to go back to that, we have a strong technical board. Some people will know our board members. They've all done it before. These are not guys who just, I can pull the wool over their eyes. I had to go back, and they all know these mines. They know what it's like. So there was a good bit of scrutiny and discussions around this and where we got to and what were the pluses and minuses and what did we learn. And with all that discussion, they were in a position to make that decision to go back into production.
And what about the kind of expected variability in the ore continuity or structure when it came to Austin, South Austin, or McVeigh?
Well, we found that South Austin is the higher grade for sure of the deposits. McVeigh is more less continuous. It has always been a more, how would I describe it? It's on a fold nose. It's more complex geology. So that, and it had been mined by the previous operators quite a bit already. So there isn't a lot of material there, but there is some material left over. So both McVeigh and South Austin are higher grade than Austin. Austin is like the bulk of the tonnage and the bulk of the material, but it's kind of, it doesn't have as high a grade as the other 2 areas.
Right. And obviously, I think, you've still got some, I guess, legacy thought process from pure gold days. Where people are trying to understand the complexity of this and, have you gone at the right time? Because you yourselves describe the deposit as kind of altered, deformed, reactivated repeatedly. This suggests a kind of structural complexity. How did that kind of affect the approach to the kind of selective mine and grade control?
So there's a process in place, really, that there's a model that kind of you need to do in these deposits. And one of it is obviously you need to do the underground development and you need to do this tightly spaced drilling. And so once you have the data of this tightly spaced drilling, this 6 to 8 meter spacings, remember, previous operators did 15 to 17 meter spacing. So you're going very, very, and it's also the angle. It's not just the spacing of the drilling, it's getting the angles and understanding the ore. So when you get those right, you get that data, and then you have to put it into a mine plan, and you have to build an inventory around it. I would say this, gold price has been our friend, let's just say that as well. It makes cutoffs much lower, it makes cutoff grade much lower, and so you're allowed to bring in tonnage, higher tonnage, so you can build those long hole stopes. Also, pure gold, we're stuck at cut and fill stopes. We're now gone to long hole, so that brings more tonnage around and allows the opportunity. So we also tried to mine around those old remnant stopes. There was a lot of issues around, can we mine next to those stopes? And we're actually able to prove ourselves that we can mine against them, get good recovery, good issues. So we de-risked a lot of issues associated with this bulk sample.
All right. And so, I guess to that point, in terms of, I think another phrase that you use, which is called, I think, geoengineering feedback loop, right? Can you sort of talk us through that in terms of the workflow between the kind of geology, mine plan and operations in real time while you're scaling up?
Yeah. In real time. So to do this properly, you need to have drill inventory ahead of yourself. So, most of this year last 2 years we've been drilling. So that gives about 150,000 ounces of material that we call drill inventory. That's been drilled out to the 6 or 8 meter spacings. So that's already drilled out. The development is done. So that goes into engineering group, and they kind of do a first pass engineering loop of it and develop the stopes around this area. Where we're going, how we're mining, how many stopes are here, what size are they, how we get access in. And so once that's designed, it goes back to the miners actually. That gives the miners ideas of where they're doing top and bottom cuts on the stopes, how they're going in there. But as they're going in there, there still has to be sampling taken all the time. Every single round you take samples, you take more samples, and that's going back into your models. So there's this continuous iteration of mining, sampling, feedback into the models, back around. And so that constant feedback has to be refined, and that gives you the final design of your actual long hole stope. So that's a very integral process on doing this mine. It's not just our mine, it's every mine really that has these sort of complex ore bodies need to have that area in place.
And just remind me in terms of the, obviously initially we're aiming, scaling to like 800 ton per day, but there's been talk of going further than that in 2026. So can you talk us through maybe some of the technical upgrades, or I don't know, how you deal with like in bottlenecks, like, I don't know, crushing circuits or gravity circuit?
Yeah, we have the opportunity to expand the mill. So the mill can go to 1,200 tons a day.
Right.
During the previous operators, it ran with very little changes. It already has run at that area. So that's the truth. But the really thing is opening up lots of development this year to open up new areas. And as we're opening up the new areas, that allows us to bring more material through. They have a shaft on the property, an old shaft, and we're renovating that at the moment. So that gives us the opportunity to bring more material up through the shaft, plus up through the decline. So that allows us to get more material up through the mill, basically.
Right. And what about this connection drift, the upgrades in terms of the haulage? What are you doing there?
Yeah, so the connection drift was connecting two portals, the east and the west side of the mine. Previously, the operator were bringing it up onto surface and hauling, and they can only haul limited times during the day. So they can only actually haul during the day. So we're able to haul 24/7 underground, and also bigger trucks. We can do 42-ton trucks rather than 30-ton trucks. So you're doing more trucks 24 hours a day with bigger loads. That makes a huge difference on the ability to move material into the mill effectively and build those stockpiles ahead of yourself.
Right. Okay. And 42s, would you go larger, or could you go larger?
You can go larger. Yeah, you can go to 60-ton trucks as well. That's the next level up as you want to scale up and get more tonnage from underground.
And what about where are we at with the kind of the cut and fill? You said you sort of transitioning towards like wider long hole stoping where feasible, but any sort of technical criteria that you're looking at or is guiding that decision?
Well, it's really around this test mining. The test mining was also, as well as the reconciliation, was also to see in the original designs and in original pre-feasibility, the mine engineering groups or the engineers, we didn't have a lot of data So they put a lot of cut and fill in there because you're mining up close to these old stopes. So the cut and fill is the best way to do that from a risk perspective. However, we went into some of these areas and we found that geotechnically it's much more stable than planned. So that allows us to go and do, as we're doing the drilling underground, we're doing what we call drill holes breakthroughs into these old stopes. Where are they? What condition they're in? And that goes a feedback loop again to allow us to do the design. So that kind of constant feedback of probe holing, testing areas, understanding the ore body, not just from a geological point of view, from a geotechnical kind of view, that feeds back into your mine design. So as we're doing that, we're finding that it's much more competent. We can mine much more closer. And actually, we're getting more grade because originally the operators would have mined up to an area, there would have been a waste area, and they would have left it in the old days. As we're drilling through this area, we're finding there's more ore on the other side. So that allows us to expand into these areas. And an example of that is we've had some fantastic drill results in the South Austin area over the last 3 months. Lots of EG, very high grade. These are all new areas that have been found by that drilling, that process.
Right, okay. And again, okay, something you mentioned earlier there was obviously the gold price is your friend at the moment when it comes to sort of, I guess, cut-off grade and even the stope shapes themselves. So what can you tell us at these sorts of levels in terms of how you kind of adjust things accordingly?
Yeah, so, based on gold price, the way it's done, based on gold price and based on cost of mining and everything, you develop a cut-off grade. So a cut-off grade allows you to, what average grade do you mine at effectively to mine it? And there's 2 grades. One is called a cut-off grade for profitable tons of ore. The second one is an incremental cut-off grade. So when you've done your development, you've done all your accesses, and you're ready to take the stopes, we call it an incremental cut-off. So you've paid for all that development. So then what's the grade around that area that you can take as extra? Because you've paid for, the main area has paid for all that cost to get there. And it's called incremental grade. So to give you an example, at the current gold prices, our incremental grade is around 1 gram. It's a 1 gram. The main cutoff grade is down to 2 grams, 2.5 grams. So, that gives you the scale of how much more material comes into the mine plan as you're developing. And in the pre-feasibility study, we'd use a gold price of $1,600 gold. So you can see now we're double that, which allows you, it's basically double material and double ability to ramp up.
But what are the technical constraints that, in terms of expanding the kind of mineable inventory, in terms of like whether it be ground support or ventilation or paste fill availability, etc.?
It's more on opening up new areas. It's development in these areas. It's just development. It's just getting the tons because they're profitable tons. So basically, you're mining them with all the ground support, all the details. So you're mining them profitably. It's just a factor of getting them more development into these areas.
Okay. And so, in which case, how do you plan to sort of integrate kind of some of these high grade zones like NT and Big Bend, etc., for future production? Because the sequencing is going to be really important for you.
Yeah. So where it has a real advantage is in our mine. It's a very deep mine. It's very high grade, and the plan at the moment, understanding the resource, was to get down very deep quickly. As you go down the ramp, you need to keep ramping down and opening up new areas. What we're finding with this approach is the mine is going lateral. So that means we don't have to go deep. We're finding new areas higher up, which means our mine plan doesn't have to go as deep as quick, which has big implications of cost because we're not going down and ramping down and moving. We're moving lateral. So this cost to move A versus beside it at B is cheaper. So basically it has an effect of saving money cost-wise, adding more tons with lower cost.
Okay, so how or when do you start kind of planning out, like things like, the Fort Vein system is relatively close to existing development. How do you kind of plan to dedicate drill drift or fan pattern from existing headings to, in like say 2026?
Most of it is basically in the mine plan now. As the team,
Okay.
this feedback loop, as I said, as we're drilling ahead of ourselves, that's why it's so critical, this drilling inventory. As you have this ounces drill ahead of you, that informs the model, that informs the mine plan. So you're building a mine plan on that, and they're coming in. So, the process of having 2 years ahead of yourselves allows you to make those decisions well in advance of actually mining it.
Right. Okay.
It's that feedback loop I was talking about.
Yeah.
Unless you're ahead of yourself with development, so you can get to the drill areas, so you can drill it, so you can feed back, that's where you get out of control. And, previous operators, if you're not ahead of yourselves, you don't know where you're mining, you don't have ventilation, you don't know where you're ramping, you're just going all over the place. And that's where you can get into trouble, in fact.
Okay. So you're now at that point where you're producing. And that's usually where there's going to re-rate potential. Do you think there's a slight reticence until you kind of ramp this thing up to kind of show what a kind of steady state could look like, or what future potential could look like?
We're starting to see the re-rating. Our stock has moved quite a bit since that time. We're starting to see that. I do think now that we're in production, as we say, there will be a wait and see to see, can we ramp up to commercial production, and even after that, can we sustain production? Because the previous operators were in commercial production and they failed after it. So I don't think just getting to commercial production will be the key. I think it will take a little bit longer there. And actually an interesting fact is the previous operators, with all their issues and challenges, they were able to produce gold at just under $2,500 an ounce, even with all the challenges. So when you think of the gold context and the market you're in, if we've done the right work and we're in gold price of 3,500, that gives you a lot of margin, basically,
Yeah. The secret is timing, eh? The secret is timing.
In this gold business, timing is everything.
Well, Shane, congratulations. Fantastic. New producer in the ranks. We look forward to hearing more about it over the coming months. Thank you.
Excellent. Thank you very much.